Good afternoon, and thank you for joining us today. I am NIN Desai, and I will be your host. I started my professional career at Merrill Lynch with their private client group. At Merrill, we managed portfolios of high net worth individuals. While it was great to trade stocks and bonds, I was always curious about how these companies went public. Thus, after business school, I joined Pacific Crest Securities. PCS is a tech-focused investment bank with a global presence focused on software, communications, semiconductors, and internet and digital media. Here are a few transactions I worked on at PCS. In 2005, IPOs were at the peak, and it was amazing to take these companies public. But that led to another question. How do VCs know what companies to invest in and which ones to take public? Thus, I joined Alpha Capital Partners. Alpha is a generalist fund with about $135 million of assets under management. My most recent transaction at Alpha was Circon, a software-as-a-service provider company. The 2008 financial meltdown led to a liquidity crisis for entrepreneurs, means LPs, VCs. Fewer IPOs means no exits for VCs, no return for LPs, and as a result, venture funds were on a decline. No new fund means less startup funding, low employment, and slow economic growth. Thus, on April 2, 2012, the Jumpstart Our Business Startup Act, or the JOBS Act, was introduced, which enables crowdfunding for all Americans, and that's how NIN Ventures came into existence. Crowdfunding is a practice of funding a project or venture by raising contributions from a large number of people, typically via the internet. NIN Ventures is a first-of-its-kind technology venture capital fund to be marketed, raised, managed, and reported online. The general solicitation and general advertising under the JOBS Act and Rule 506C of the U.S. Securities Act made it possible for us to raise this fund. This rule came into effect September 23, 2013, and we were the first ones to go live with a website and videos about our fund. NIN Ventures also became the first venture fund to be seen on a billboard, which was followed by in-factory ads and other social media facilitated marketing. NIN.VC has been the recipient of numerous awards, and I've also been awarded 2015 CEO of the Year Illinois for innovation and contribution to the venture capital and private equity industry. And most recently, Private Equity Fund Manager Watch for 2017 by Corporate America. Since 2014, the crowdfunding industry has grown from $16 billion to an estimated $34 billion in 2015 and is doubling or more every year. And according to the World Bank estimates, crowdfunding will have a global market of $96 billion by 2025, which is 1.8 times today's global venture capital industry. Crowdfunding is spread across several different types of funding models, including rewards, donations, equity, debt, lending. The two most popular types of crowdfunding methods are rewards and equity. For reward-based crowdfunding, entrepreneurs pre-sell a product or service to launch a business and sometimes even in return for gifts and thank you notes. For equity crowdfunding, the backer receives a share of the company, usually in exchange of the money pledged. For NIN Ventures or NIN.VC, it would be limited partner interest in the NIN Ventures Technology QP Fund. There is a major difference between crowdfunding portals and NIN.VC. I come from an entrepreneurial family, so I can speak on their behalf. Entrepreneurs are brave and courageous bunch that are determined to change the way an existing industry functions. On that journey, they need a lot more than just financing. They need guidance and domain expertise, help with PR and marketing, recruiting, viable exit strategies, more often follow-up financing, etc., which crowdfunding portals are not able to support. On the other hand, crowdfunding exposed investors to a whole new asset class which the normal population never had the knowledge or expertise to invest in. About 99% of startups fail. On top of that, low minimum investments like $1,000 does not give them a say or a gold peak, putting investors at a high degree of risk. At NIN.VC, we solved all these issues. NIN.VC provides diversification. We take a board seat on all our investments and lend the necessary support that an entrepreneur needs to build a business like they would get at a traditional venture capital fund. And the most important part that investors care about is the ability to directly invest and enjoy direct returns, which is not the case with traditional venture capital funds, as well as the ability for valuation and dilution analysis for follow-up rounds, which otherwise they would get at a traditional venture fund. We're a hybrid between a traditional venture fund and a crowdfunding portal. The market is flooded with investment vehicles, including stocks, bonds, mutual funds, IRA, real estate, and alternatives like venture capital. However, most people are short-sighted and have a three-dimensional portfolio that is stocks, bonds, and money market, versus taking a long-term approach and investing in alternatives like venture capital. Investing in alternatives allows true diversification and also helps mitigate risk involved in having just a traditional portfolio. For example, Yale. Yale is currently the best performing endowment fund in the United States. Since 2008 to 2015, Yale has increased its asset allocation in private equity and venture capital from 20.2 to 33%, out of which 16.3% is venture capital, compared to 13.7% in 2014 and just 10% the previous year. In general, most people have a three-dimensional portfolio, that is stocks, bonds, and money market. But if you look at Harvard and Yale's portfolios, they take a long-term approach and invest in alternatives like venture capital. Historically, if you look at U.S. Venture Capital Index and S&P 500, U.S. Venture Capital Index tends to outperform S&P 500. And not only that, they have an inverse relationship. This type of investment strategy allows them to achieve true diversification and also helps mitigate the risk involved in having only a stock and bond portfolio. Most people are indirectly investing in venture funds via a pension fund or any other investment vehicle. Crowdfunding allows them to directly invest in a fund of their choice by eliminating the middleman in the management fee and allows them to generate higher returns. Now a little bit about the fund. NIN.VC is a $25 million early to growth stage crowdfunded technology venture capital fund. We invest in Series A and B rounds and write checks anywhere from $1 to $5 million. So the question is, why are we doing early stage technology capital fund? If you notice, from 2002 to 2015, technology investments have dominated the venture capital industry. And the highest amount of venture capital funding occurred in the early and expansion stage companies. If you notice, from 2000 to 2015, technology-focused funds have outperformed U.S. venture capital investors, and generally, first-time fund managers tend to outperform non-first and other VC funds. So what does NIN.VC invest in? At NIN.VC, it also starts disruptive technology. A disruptive technology is an innovation that changes an existing industry and creates a new value network, displacing an earlier technology or way of doing business. Just like how we're disrupting the venture capital industry. At NIN.VC, we start with an entrepreneur. We invest in an entrepreneur because entrepreneurs build companies and not the other way around. Being an entrepreneur is the hardest job in the world, and entrepreneurs face varied challenges when it comes to taking the disruptive technologies to market. The few attributes that we look for in an entrepreneur is the ability to dream big, experience and expertise in the industry, the ability to communicate with the team and outside, flexibility to adapt to fast-changing environment, and certain personality traits like being focused, dedicated, disciplined, working hard to accomplish their goals. As long as they have certain ingredients like a good management team, a disruptive technology, a viable product, and a revenue-generating strategy, they form a basic foundation that leads to long-term success. We at NIN.VC like to invest in companies that are going to stand the test of time. Every sector at some point is up for disruption. Our focus for 2017 is primarily on 3D printing, fourth industrial revolution, cloud computing, virtual reality, financial services technology, education software, and other path-breaking sectors within the United States. Our goal is to invest in the next big trends within these sectors. For example, 3D printing. 3D printing has been used for rapid prototyping and has been applied in a number of industries today, including manufacturing, automotive, consumer, aerospace and defense, and especially healthcare. As the accuracy and material markets have improved, the medical space shows great potential for this technology. There are about 123,000 people currently on the organ recipient list in the United States. That list grows at an average of 12% annually. On the other hand, organ donor increases about 1 to 2%. And 21 people die every day because they cannot find the right organ. What if 3D printing tissues can help save some of those lives? One of the other sectors where we see disruption is the ad tech industry. Traditional television has been on a decline for the past few years because of the consumer behavior patterns. People are spending more time on their personal devices like phones, tablets, and PCs. An average American spends about 3 hours every day on their personal devices, and this is the first time spent on personal devices have surpassed time spent watching television. So what does this mean for the ad tech industry? The current digital advertising market is $75 billion, and traditional TV advertising is $112 billion. And as the consumer is migrating to watching more digital TV, this $112 billion is also migrating to digital advertising, which is a huge opportunity and disruption for the ad tech industry. So how can you be a part of NIN.VC? Recently, the SEC approved Title III Jobs Act equity crowdfunding for non-accredited investors, which allows U.S. citizens, regardless of income, to make direct investment via a crowdfunding call. However, investment in funds like ours is still limited to accredited investors. One must be an accredited investor and verify themselves as an accredited investor before they can invest in the NIN Ventures Technology QP fund. An accredited investor is an individual with an income of more than $200,000 per year or a joint income of $300,000 in each of the last 2 years, or has a net worth exceeding $1 million either individually or jointly with his or her spouse, excluding the primary residence. For an entity, any trust with total assets in excess of $5 million qualifies. There are multiple ways to verify if you are an accredited investor. For example, for an individual, it's income, assets, and third-party verification. For an entity, it's asset and third-party verification. So what are multiple ways of investing in NIN.VC? There are a wide range of options when it comes to investing in NIN Ventures Technology QP fund using checkings or savings accounts, defined benefit plans, self-directed IRA, and digital currencies. A defined benefit plan is a retirement plan that can invest in a wide range of securities and investment products, including mutual funds. Some of the advantages of investing from a defined benefit plan are all contributions made to the plan and subsequently invested are top-line tax deductible to the business, whether the business structure is a sole proprietorship, LLC, LLP, PC, C Corp, S Corp. The investment growth is tax-deferred under the umbrella of the defined benefit plan. The contributions might be significantly greater than that of the 401k profit sharing plan to help increase the retirement savings account for the business owner. To invest in NIN Ventures using your defined benefit plan, you must first sign up on NIN.VC and verify that you are an accredited investor. Next is to establish a defined benefit plan with Robin Weingart and Associates. Once the plan is established, the contributions will be calculated and you can complete the subscription and payment process on NIN.VC. We also let investors invest in our fund using the retirement plan. For example, self-directed IRAs. Self-directed is a descriptive term that is used to describe how some IRA providers administer the assets they hold. With a self-directed IRA, the client controls what their IRA invests in. Self-directed IRA allows investors to hold alternative assets within their tax-deferred retirement plans, such as private placements and venture capital. Like any IRA investment, self-directed IRA has built-in tax-deferred growth, and thus an individual will not pay capital gain tax on the growth of the investment. The return will flow back to the self-directed IRA and will not be taxable to the account holder. Self-directed IRA allows for true diversification that is otherwise not achievable in the standard IRA portfolio. To invest in NIN Ventures using your self-directed IRA, you must first sign up on NIN.VC, verify you are an accredited investor. The next step is to establish an IRA account with interest group. Once the plan is established, you can complete the subscription and payment process on NIN.VC. The entire process takes at least 7 to 10 days. Digital currencies are emerging as a new form of alternative and global currency. For example, Bitcoin, Litecoin, Dogecoin. We at NIN Ventures understand the significance of this change and thus have teamed up with Snapcard to let Bitcoin owners tap into venture capital. We allow digital currency owners attain liquidity via Snapcard in return for investment in the NIN Ventures Technology QP Fund. Now let's go through the investment process step by step. The very first step is to sign up on NIN.VC. Sign up is simple: first name, last name, email, password, and acknowledge that you are an accredited investor. Once you sign up, you get access to our marketing materials, PPM, investor presentation, and other suggested readings. You get invited to attend our events and calls. You can also schedule a one-on-one meeting with us or at our office or online via Skype. Once you decide to make an investment, accept the risk and disclosure statement that will explain what venture capital investment is. The next step is to verify accreditation. Once that is in order, it's only a matter of filling out a subscription document and a W-9 form on NIN.VC. The last step is payment, and it's as simple as selecting the payment method and the amount to invest. Please note that venture capital is a high-risk, high-reward investment vehicle, and we strongly recommend reviewing other suggested readings on our website before making any investment decisions. Once again, thank you everyone for being on the call. Sign up on NIN.VC to begin your investment process, or feel free to reach us at contact@NIN.VC or 312-953-0930 to schedule a one-on-one meeting or with any other questions and material requests. Have a wonderful day and happy investing.